Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and try to understand what happened in the market during the previous week and also plan for a better trading week that's upcoming and starting from tomorrow, November 11th, Monday 2024. So let's get into the charts. Here we go. This is a weekly view of Nifty on the left side, and on the right side you have a daily view. Clearly you can see it was ascending up. There is a bull rally that's long going, and then this hit at almost the top of the trend line, and then has been retracing. On the daily charts we can clearly see that extent of that correction of nearly 9.5%. It looks like it's at the resistance zone. Similarly, in the Banknifty, you see a ascending wedge, a narrowing ascending wedge, which got hit at the top of that wedge and then has been correcting since then and consolidating at the end of that, taking support above the 50 exponential moving average. In the daily charts of the Banknifty, you see here on the right side that it is within a parallel channel trying to consolidate. Now, what exactly happened? So, it was a volatile week. Right, it was volatile week because of the obvious reasons that it was a US election outcome that happened once in 5 years, and it was a major event, and that volatility were reflected in our markets as well. And it extended the correction during the process for another 1%, and then managed to close negative. Although the momentum has gained a little bit, it gave up some of that the last 2 days of the trading days. So finally 161 points down. It's a mistake to have shown that as negative. Let me correct that right away. So it was 0.66% down on the Nifty. So it's 9.4% of correction. Although the rally has been 72% or more from the June of 2022, and still it's not that big of correction that has happened. It's only 9.4 over the last. The biggest correction is only 10 or 11%. The banking index also, it went very volatile, but it managed to maintain that momentum in the sideways. It's throughout the October and the November, the first week of volatility as well. It managed to close flattish, did not go too much of negative 0.24, just 126 points lost, even after the US elections as well as the Fed event that came up last week. And it is closed below the 20 and the 50. It has 100 and the 200 exponential moving average. But that's what called the Banknifty. In the case of Nifty, it has lost all the major moving averages except 200 exponential moving average. Now look at these candlesticks. Yeah, so this seems like it's a weekly candle that we're talking about of Nifty and the Banknifty. So the Nifty, you can see that it seems to be a change in priority zone, a support zone where it bounce, and then from here could be anticipated. Right? Clearly it's a change in priority because it's a zone where major breakout happened, and the price action seems to be taking support here. Similarly, weekly we see that the candle that is formed is having a long wick size indicating volatility, and finally it's kind of slightly indecisive because of the small candle. So is Nifty. Its candle body is small and the wicks are more. So that's the volatility and the slight indecisiveness that's seen in the market. Right? Change in priority is more evident in the case of Nifty on the weekly charts. It's possible bounce would be possible. On the daily candlesticks, you can see it's a bearish candle, small body, indecisive there, and it's a wide range bearish candle in the case of Nifty. Right? So candlestick is almost showing bearishness. Look at this Bollinger Bands. It's expanding on the downside on the case of Nifty with a bearish bias, indicating that it probably is going towards the 200 exponential moving average. So it's definitely bearish. But in the case of Banknifty, you see that it is bearish bias, but it is still consolidation. Its expansion has not happened yet on the downside. So it's sideways with bearish bias is also indicating of the Nifty, of the Banknifty. But Nifty clearly bearish from the Bollinger Bands. So that's about it, right? That's what is summarized here. Candlesticks are negative, Bollinger Bands are divergent. The case of Nifty and the Banknifty, one indicating more downside, another indicating sideways consolidation. Nifty also has a change in polarity, it is also mentioned here. Also there is a moving average resistances that's there right there. You could see that there's a lot of resistance of the moving average. This also, Banknifty also moving average, and also it's very close to the support zone, the previous ring lows. It's very close to that, both of them. So that's why it's in my narrow range, right? Momentum trend indicators are RSI and the ATX that we're talking about. We look at the left side weekly time frames and right side the daily time frames of the Nifty and Bank respectively. Right, so momentum is sideways in the case of both, sideways and falling. And this over the weekly that we talk about. On the daily, the momentum is momentum is slightly slipped back in the case of Nifty into the bear zones, and momentum remains to be sideways and it's falling down in the case of Banknifty. So overall, you can say that momentum is bearish. Momentum is bearish in the case of Nifty, and momentum is sideways in the case of Banknifty. Look at the trend. Do you see that it is still bearish? It's bearish with increasing bearishness is what you see overall, right? So summary of that you can make out from here. So yes, some momentum gain had happened as compared to the previous week, but momentum continues to be weak, and trend also in the bear zones as of now. Next, where apart from the momentum of the trend, we see the volatility with respect to the India VIX, the fear and greed index, and we see that there was a 9% spike up ahead of the event, and now we have a 9% cool off, but still it is not cooled off that much. 14.47 is medium volatility. Remember, we came up from the 10-11 levels, and then so there is a lot of fear that is still there. That could be deploying new US tariffs and all that may be on the way. That may be the fear that is in the market. Market may be anticipating that. So 14.47 of fix means there is some element of fear and greed that's still there, but definitely the VIX has cooled off last week. Although it remains still at the very high level. Not a very high level, at the medium volatility level, right? That's about that. And then next we move on and try to understand what the open interest analysis is, right? So it's a long unwinding that you can see in the futures open interest, which is bearish in nature. People are unwinding the long portions in the case of Nifty, and the Bank Nifty open interest futures portions are showing short bill of definite bearishness. So there is a consistency on that. There is bearishness in the futures on Friday's build-up. Now there is the open interest for the 10-15 days of options for the next weekly expiry of November 13th and 14th. We can see both are bearish, 0.69 and 0.64. But what is required is about 1 to be in bearish portion. So you can clearly see that huge resistances are being built. Not enough of supports are there. That is built on the put side. Right. So if you look at the levels on the chart that is given on the bottom, Nifty has got a highest put writing at 23,500, very far from where it is right now. And highest resistance is seen at 24,500. That's quite a 1,000-point range, right? And the second highest put and call right support second level is seen at 24,200 and 24. So market can continue to be volatile, right? And that's what the option writers are looking at for the next week. The Bank Nifty 51,000 and 52,500, 1,500 points of range is where the highest put and call rating is seen. Second level is 58,000 and 53,000 where the second highest put and call rating is seen. These are the features build up that we are seeing. So this is one way of looking at the support and resistance levels. Another way would be to look at the charts and then figure out what are the support and resistances. So we basically look at the previous resistances, swing lows, gaps, Fibonacci levels, and that's what we look at. So based on that, we can clearly see that there is going to be a bunch of resistance at the 20 of the zones near the 24,500. Once that is clear, then we have previous resistance zones where the breakouts happened, and that could once again be hurdles on the way up. Then there is a gap that comes in at 25,700, 24,500 and 25,000 is going to be big resistances. Downside, and the 200 exponential moving average is 23,500. That's a major big support, right? Before that, you have the previous swing lows that can get retested Right, there is a 24,000 big rounding number that's going to be a support as well. Well, Banknifty similarly, you see that the major resistance would be to move out of this consolidation that has been happening from the October 7th. Right, that's a long consolidation period. It has to break down or break out. So the ranges is 52,818 and the swing lows at 50,200. So any breach of these could be the move that we'll have to watch out for. And right now it has lost the 20 and 100, 50 and the 20 expansion moving average support, and now 100 expansion and 200 expansion is still there. So based on that, we have come out with this Nifty and the Banknifty resistance and support levels. You can see that clearly. Make a note of these levels of resistances and supports. Let's move it. We'll try to understand the major sectorial indices. You can see that none of them are ready to take any longish portions on that. In fact, if you analyze this, you can see that the only sector that performed last week was IT, which went up 4%. Others are all negative. Realty has lost 4%, 4.5%, 4.2% actually. FMCG is 2% lost and 1.2% pharma lost. Autos are negative flat. Metal lost 1%. So yeah, so the bearish short-term momentum could be seen in the auto sector, FMCG sector, and reality sector in the short term. It's still bearish. So majority sections are in bearish zone. So there is some trouble. The chance of that is clearly seen there. You can see that the Nifty had gained. Momentum remains in the bull zones, but in the metal you see that pullback continues to be in the sideways. Auto continues to be the sideways in the medium term. Pharma maintains that bullishness almost on the edge. FMCG continues to be sideways, and reality continues to be the sideways. We're talking about weekly charts, right? So it's absolute sideways momentum overall, if you see, except for the IT and the pharma, which are the defensive sectors, which is trying to hang on the weekly momentum RSI 60 levels. But it's all slipped in the sideways. None of them are bearish on the medium term. In the short term, many of them are bearish. More than half of them are in the bear zones, with respect to the moment, of course. Now, the next study would be on the heavyweight stocks that contribute maximum to the indices. So HDFCs and Reliances and all that. So HDFC Bank is doing okay. It has climbed to the bull zones and then back to the same level where it had been facing resistance 6 or 7 times during the last 1 or 2 years. And once it breaks out from there, it can be a big one, but it's not going to be that easy because the volume is still less. But overall, that is what is holding the market, and that's what is holding the Banknifty. So will it retrace to make another 1,000, 2,000 points of another 500, 200,000 points of correction or not, is what we have to see. If that happens, Banknifty is going to come back and lose the momentum in the sideways and then fall back and catch up with the Nifty on the downside. So what is holding the market is HDFC Bank. Well, Reliance has been falling, has been correcting to nearly 20%, and then lost a major support zone at this trend line that you're seeing here, and then falling towards the parallel channel bottom. So more fall. It's in the bear zones on the medium term. Bear zones on the weekly charts is very bad, and charts are showing that it can fall further down. So Reliance is in big trouble, and that is what is causing all the sell-off is in the Reliance. The major trouble is in the Reliance, and the only one that's saving the market is HDFC Bank. HDFC Bank also last week had slipped in sideways on the medium term. So the only savior asset now is HDFC. If that falls, everything falls. ITC is another big contributor to the index that is also falling, taking resistance at downside 60 and falling down. Bank always sideways. IT has picked up and climbed back with the sideways zone. So what is causing problem is Reliance. What people are banking on is HDFC Bank, ICC Bank, and the IT sectors along with ITC. So overall sideways with only Reliance falling to the bear zones. The medium term weekly chart. So watch on this Reliance. If the Reliance stops and finds a support anywhere before this channel top, or from here itself it is bounced up, then everything should be okay. at least 1 or 2 weeks. It should, if that happens, so okay. Otherwise, we may have continuous selling. And same with HDFC Bank also. If you cannot hold on there, we may have big troubles. So overall, just to catch up, sector indices are all sideways, except for IT and pharma, and heavyweight stocks are all again sideways, except for the HDFC Bank, which is trying to save it. The broader market is still in the correction mode. We have a red candle. In the mid cap, we have an industry small body with violent volatility, and small cap, we have a solid bearish candle, which also seems to be an inside wall that indicates that it is taking some sweet time to go down as well. But let's keep the bottom of the channel. Nearly 10% of correction has happened, so sideways broader market is what you see here clearly. That's about the different indices and heavyweights and sector indices and the broader market indices that we already studied. Now we'll see what is the story with respect to the institutional participation toward the big shocks. So FIS continue to sell for more than 1 month now. So they have sold in just 1 month nearly 1.3 lakh crores. That's more than $13 billion of all from our country. That's the big trouble in India. So trying to catch up, mutual fund money is flowing in, and then this week also 14,391 crores of buying has happened, while it has fallen below the 20,000 yearly selling that happened last week also, even after the elections outcome has come in. So how long can the mutual funds or the domestic institutional money hold on the market and keep the market there? No, that is a big question. Can it do it alone for a long period of time? So when are this where is this money going? Is it going back to the US where the Fed rates are cut down, or is it or is it going to China? Where is this money? Where is this money shifting? So several different factors, and there's heated valuations and large number of IPOs, and all this could be the reason why the money is getting shifted around. And yeah, so that's a deep concern that the institutional participation is lacking with respect to the foreign institutions. So that's a concern actually. Let's now look at the global markets, the global commodities and the currencies. The currencies, the big breakout happened in US INR. 84.38 is for Indian rupees, the weakest ever. That's the US INR spiked to 0.38%. You can clearly see in the downside here the breakout after very long consolidation on ascending wedge. Big breakout, solid wide range bullish candle, and rupees weakest ever. This is for the US elections with a stable government that's coming out. The US currency also, the dollar index also spiked up, but the rupee has depreciated, as would any other emerging market. Rupee will depreciate when the US dollar appreciates. Yeah, that's not that great for our economy, emerging market economies. With the weakening local currencies, not that good news, right? It's a concern. Crude oil has spiked up 1.5%. It's okay as long as it's below this trend line, but it has climbed above the 70 after having fallen to the 66 or 64 kind of levels earlier. The gold has cooled off. Some kind of correction has happened there. 2% of correction. That's after the dollar has improved. But this seems to be a 3 candlestick bearish pattern that is forming. We have a doji, that way gravestone doji, and then you have bearish candle. So there's likelihood that it can correct a lot more. That's what it looks like. But momentum still in the bull zones. It could correct and take support 25,500 levels and then bounce up once again, or 2,600 find support there and bounce again. But right now gold is in correction mode, but a very short-term correction mode, because momentum is absolutely finishing. The rally that has happened is 28-30% in just 2024. And so in a nutshell, gold is correcting, which is fine after the rally. Crude oil is okay, sideways, 1.5% green, but okay. not breaking out, and rupee has weakened its biggest trouble. That's about commodities, currencies, and then now we have the global markets, primarily US markets. US market, look at this candlestick, widest range bullish candle on all major indices, Nasdaq, Dow Jones, S&P 500, all of them big wide range, all of them all-time highs, all of them having momentum rising. So US markets are rising up in bullish mode is good for other markets as it is a mother market, but given the concerns and the new formed governments, policies and all that, emerging markets will be volatile in that sense. So US market is good, is rising up is good fact for our markets, right? Now that the analysis, then let's get into some actionables. There are two stocks which is a short side. EU Small Finance Bank. This is why it's speculative, because in the weekly charts it has slipped the bear zones on the momentum. Trend has crossed on the bear zones. Volumes are near the moving average in red, and good risk-reward. If you take risk-reward in the middle of that last week's big fall candles, half its stop loss, then risk-reward of 1:2 or 1:3 is possible easily. Alright. There is a trend line channel. That bottom of that is will touching it. That's AU Small Finance Bank Limited short. Next one is Asian Paints. That also has got a parallel channel target. 1:2 or 1:3 is possible. Reason for the trade is big volume, big bearish bouncy patterns, big momentum, big negative crossover to big bear zones on the trend. Right. So two stock picks on the short side. AU Small Finance Bank, Asian Paints, both short side. Now the FNO strategy is a non-directional one. It's completely risk defined. It's known as Batman with multiple completely hedged, purely risk defined, low margin requirements. Very good range, probably about more like 70%, but very good range, and risk reward is also reasonably, within the profitability remains is range of 23,700 and 24,600, almost 1,000 points. And if there is a spike that happens on either of the side, you can make some more profit. Otherwise, and if it breaks out of the range, you can get out. Completely risk line. Basically, you are selling OTMs, far OTMs on both sides, call and put, and you are buying hedges inside as well as outside. That's Batman. So small profit if it is in range, big profit if it breaks out of that, and loss if it breaks out of the entire range. Right. That's Batman's risk defined FNO weekly Nifty strategy that he has explained here. Hope it helps. Now that we have the actionables as well, we'll just wrap it up. So markets obviously went volatile following the US elections and the Fed rate cuts that happened last week, very eventful week. And the China movement of new policy outcome also came in the other day. So it went volatile obviously, and then it extended the correction in that process, and then finally just managed to close flattish on the case of Nifty and Banknifty, maintained the moment on the sideways. FS continued to sell big time, and the correction so far is so 10 to 11% the max. Remember, we had a 72% rally from the June of 2022. So multiple breakouts that happened. That means a bull rally that's going on, a small correction comparatively. Let's try to bucket the different parameters that is in favor of the bulls or the bears. Very few of them for the bulls as of now. Yes, Banknifty is sideways momentum. Banknifty remains sideways momentum is positive. Even though it's not bullish, it's not falling to the bear zones as Nifty as well. But the bands is also showing contraction in the case of Banknifty alone. Not an expansion yet. Right, so most institutional money is flowing in, this is positive, but no. Yeah, it's a question there, as I said before. Now, single priority zones, we have seen that the Nifty is in a very major support zone. From there, bounce up would happen. The user license of green is very positive. Now, what's in favor of the bears? Candlesticks are bearish. Yeah. So to continue with that, yeah. So if you look at what are things in. What are the different parameters in favor of the bears? You can see the bearish candlesticks on both indices, a lower high pattern, bearish momentum on the Nifty, and bearish trend as per the ADX on both indices, and bearish build up on the futures OI, bearish PCER put call ratio on the options, with the fact that the FIs has heavy selling, and it has been relentless selling of $10 billion in October month alone, and Bollinger Bands are expanding on the downside with a bearish bias on the Nifty. Nifty has lost the 20-1500 exponential moving average. India VIX is not cooling off really. It was still in the medium volatility and not the low volatility. These are all different factors in the bears. Also, the major sector indices, few of them are bear zones in the short term. Heavyweight stocks or lands is heavily in bear zones in the weekly charts as well. A lot of markets are in the correction mode and then having negative candlesticks as well. So so what projects out is the bearishness, and definitely Middle East crisis and new tariffs and the US elections are all reasons for the volatility, and that can further make the markets correct. So caution has to be exercised, and you have to refrain from taking the long positions, and the tight stop losses has to be installed. Cybis can continue to do the investments no matter MARKET.MORE, which are the long term. So technically, charts are bearish bias. It's under a correction. Momentum and the trend is in trouble. So mild bearish bias continues. Mild because market is corrected near to 10%. So probably it may decide to take a support and then move further up in a slow piece. So that's why it's mild. It's not moderate because the Banknifty also is still maintaining that momentum sideways. The global cues like the war crisis, the pandemics, and interest rates and major events could screw up the technical analysis most of the time. Keep that in mind always whenever I take. Black swans could come in any time and all this analysis will go for a toss. But that doesn't happen often. Now 23,000 and 24,000 is the range for the Nifty for the next week, and 49,400, 53,000 is the range for the banks for the next week. So corrections on the way. So as long as this 26,000 is reclaimed and this 54,000 of the bank is reclaimed, until then we may be consolidating. So the next leg up is after that. Major resistance supports, we already discussed that. Always hedge your portions, hedge your portfolios. That's the only thing in your hand which will keep you in the game, even if something really bad happens. So learn the hedging strategies, check out the playlist, a lot of strategies and options, a lot of investments, a lot of rental income based option strategies, all these are there. Check out that. That's all I have. If you like and if you find this useful, subscribe, like, comment, share to others and all that. I'm also active in Twitter and X during the weekdays. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.